don't keep more than $3,000 in your checking account. Is this good advice or not? So I came across this article and honestly, total clickbait, but some of the claims are actually pretty true. But that's how they get you, right? So a lot of true things, but mixed in with that, some not so true things, which I believe is actually analogous for a lot of things in life, but we won't get into that. We'll stick to personal finance. Hi, I'm John. I teach personal finance at a Big Ten university and own a wealth management practice. If you learn anything today, please like and subscribe. So let's go through this article. All right. It says, I'm a bank teller. 7 reasons you shouldn't keep more than $3,000 in a checking account. Let's analyze this together. So here's the first thing they tell you. There's no interest earned on large balances. So yeah, actually that's right. That is true. The national average interest rate you can earn on checking account based off of information from Wallet Hub is 0.07%. Side note, I am a contributor to Wallet Hub. They didn't pay me for this, but in my capacity working for a university, well, they asked for my help on something a long time ago, so you can go check it out if you want. But yeah, that's right. You're not going to earn very much on money that's held in a checking account. If you have excess money, if you have large balances, I typically recommend moving it to a high yield savings, or if you can, you could invest it, but you'd want to work with a financial planner to see is this money that you can forego having losses in the stock market. But with online high yield savings, you can probably earn 3.3%. That's what I found from Ally Bank. I even have a solution that I have for my own clients, a high yield savings account that we offer through our custodian altruist that right now is like 3.25%. It's all fairly competitive, but that's way better than 0.07%, right? So if you have $10,000 that you don't need in your checking account, well, you could earn an additional $330 in the year simply by moving it to a high yield savings. That's what I do in my own personal finances. We don't keep hardly any money in our checking account. We do keep some, which we'll talk about, but a lot of it's moved to a high yield savings account. And most of the time, those are still covered by FDIC insurance. So this is actually pretty good advice from the article. You don't want to have too much cash sitting in your checking account. But the question is, how much is too much? A lot of this actually comes down to just logistics, paying off your credit card and a lot of other expenses that are tied to your checking account. I typically, my own life, and would probably say for my clients, maybe target somewhere like 2 months in your checking account, maybe 3 months, simply because you don't want to have overdraft fees. If you have a month with a large expense or you're paying off a large amount from your credit card, because again, maybe you're paying for a vacation, you don't want to then overdraft and pay those different penalties. So maybe somewhere between 2 to 3 months in your checking account, just to cover the logistics of money going in and out. But that amount is dependent on each individual situation. So this article saying not to have more than 3,000, it's kind of clickbaity because it really should be specialized to the individual. All right, here's the next thing that they bring up. Easier access makes frivolous spending more likely. For some people, this is true. I won't lie. If I have money in my checking account, I don't think that it's going to make me spend more. But I do have clients where they say, I need this money out of my checking account, move it to a savings account, because if it's out of sight, it's out of mind, and I don't feel like I can spend it. So you'll actually have to ask yourself, if you have this money in your checking account, are you going to be more prone to spend it or not? I view all of our spending as the same, whether it's a credit card, a debit card. I spend most of my things on a credit card for a variety of reasons, which we'll talk about later, but I treat it like a debit card in that if I don't have the money to buy something with my credit card, if I don't have the money in my checking account to pay for it, I'm not going to use my credit card. So you want to ask yourself, if you have this money in your checking account, are you going to spend it? If so, then maybe consider moving a lot of it out so it's out of sight, out of mind. All right, here's the next one. You lose out on opening bonuses. This is a stretch. All right. So there are a lot of different checking accounts out there where if you move so much money into the account and you start a direct deposit into that account, they'll give you some bonus. You can go look up the different ones that are out there. Personally, moving your checking account's a huge pain. And you're only going to maybe move one time, but are you really going to keep juggling around and moving from different checking account to checking account? Because when you're doing that, it's hard. There's a lot of things that are linked to your checking account, and you really want to go into all those other tertiary different subscriptions you have or places where you're going to, make payments from, and you have to change out where the checking account is. And then sometimes, if you link an account, you have to wait 3 days and they submit, a random deposit, then you have to go back and submit how big that deposit was, and then they confirm that was linked. I just don't think you want to do that. And the amount of hassle that you have to go through in order to get a little bit of a account opening bonus, it's frivolous. I just do not think that this is worth it. Bad piece of the article. I would scratch it. Your money isn't as safe as you think. So this is where it's talking about FDIC insurance and how if you have more than $250,000 in that account and the bank fails and the money's not secure. That, I mean, that's true. But if we're talking having more than $250,000 in that bank account, yeah, you probably like, I mean, unless you're spending $100,000 a month and this is what your 3 months, 2 months of expenses are, you probably need to do something with it anyway. And so I wouldn't say that the fear of the bank failing should be your motivating factor. It's probably having your money actually work for you to be the motivating factor. This seems a little bit more like fear mongering, but it's a good information to know about FDIC insurance. It's covered $250,000 per individual per account type. The next thing is no opportunity for compounding. Yes, that makes sense, but that really goes back to you're not earning any interest. And so I honestly think that they just tried to make another point, but that really should fit in the you just don't earn that much interest on the account. I think that's what they should probably do. It's just not that great of a point in the article, right? That fits in the interest category. Compounding is like a subcomponent of interest. So it can impact mortgage, car loans, and other approvals. So this is saying that in the underwriting process, I'll just read the quote. Banks and lenders look askance at excessive funds sitting in checking accounts, explained this person who wrote it, Rachel. They want to see a clear delineation between assets, investments, and funds marked for down payments or reserves. I don't know if them seeing this money in your account is going to make you then think like, oh, wow, this person's not being responsible, or I want this money to be elsewhere. It's cash. It's cash in a, to some degree, secured FDIC account. I don't think that they're going to care if it's in there or in a savings account. It's going to be cash all the same. So this seems like a point that's really a stretch or was written by a bad AI, writing companion. I don't know. I just don't like that point. It can impact mortgage, car loans, other approvals. No, if you have the cash, it's going to look good anyway. You could become a target for fraud. I will say, yeah, that is something that I even teach in my personal finance class that I teach at a Big Ten university, which is it may be worthwhile to not have that much in your checking account because once the money's gone, it's gone. And some banks, they do have some protections in place for their customers, but to some degree, once it's gone, it's gone. And if they can't prove fraud, you might not get that money back. If you use a credit card, there's laws in place to help you in case there is fraud, and they can just reject the transaction. But if money leaves your checking account through your debit card, if it leaves, the money is technically gone. And so I actually think this is a good point. I'd put that up there probably as my number one or maybe number two behind the interest thing is that you just want to prevent fraud. I've had this happen in my life years ago when I was in high school. I had money taken out of my account through my debit card linked to my checking account. I spend most things with my credit card because again, I treat it like it's a debit card. I don't spend more than I have, and it helps with fraud prevention. So I think it's actually a pretty good reason from the article. So I'll summarize. I think that each person is different. Do you really is it really wrong to keep more than $3,000 in your checking account? No, I don't think it's wrong to. And it depends on your situation. If you have a lot of money going in and out, it could make sense to have a little bit more so you don't have overdraft fees. If you have very few expenses and 3,000, let's say you have 10,000, if that's overkill for how much you need and you can easily move it to a high yield savings account and move it back, great. If you're, in the situation that we brought up earlier that you have $400,000 in your checking account, yeah, unless you're using it next week, you should probably get that moved out there a little bit from a fraud prevention, the small risk of the bank failing, anything above the FDIC insurance. But also, you want to have that earning and doing something for you. So consider all those things. If you learned anything, please like and subscribe. Godspeed and happy planning.